Gold prices end the day lower and back below 1850 in what was a wider trading range. We saw the widest range in about a week. But prices, after ascending above 1850 and closing there yesterday for the first time in a while, back below 1850 as we close out today. Ultimately, the market's watching. We had some weak data this morning, weak durable goods. We have had some weak housing data this week. Clearly, the gold market watching what's going on with the Fed and the dollar, which was higher today. The dollar opened lower, moved higher. Treasury yields, which have been moving lower, continue to trend lower and then moved higher. And ultimately, right now, gold waiting for that next catalyst event, whether it comes from the Fed, whether it comes from the economy, or whether it comes from somewhere else. It continues to kind of hold there at this level near 1850. Now, what does this all mean for volatility? Well, if you check out that CVOL index over at cmegroup.com, you'll notice that volatility remains stubbornly low, near the low end of the range that we've been trading since April. So right now, despite the fact that we've seen price fluctuation, seen a dip all the way down to below 1800, now back up towards 1850, we have yet to see a major spike in vol and gold vol, despite the fact that we've seen some pretty good price fluctuations. Now, lastly, what did the Fed say today? Well, they released the Fed minutes from the May FOMC, and they're going to remain vigilant to fight inflation. That's been their top headline that we've been reading about for quite some time. Inflation, obviously, at decade-level highs, and gold prices reflecting the fact that there is high inflation. That is a good hedge. If you look at what the dollar's done year to date, the dollar's rallied between 7 and 8%, and gold prices, which were hovering near unchanged on the year, that is not the typical relationship. As the dollar rises, gold prices typically come off. That hasn't been the case in 2022. Despite the fact that gold prices have traded off the highs, they still remain positive on the year. So the Fed right now going to continue to maintain that vigilance against inflation, expecting 50 basis point rate hikes at both the June and the July FOMC. After that, it gets a little murky and a little unclear, but certainly the Fed will have a lot to say after those meetings, and gold prices will likely react. So gold prices, after seeing their first close above 1850 in quite some time, back below it, but just barely. Tomorrow we get the claims numbers, we get the first revision to first quarter GDP, and likewise we'll continue to watch what the Fed says and what the Fed does.